Hey guys, welcome back to the channel. So in a previous episode, we were talking about how to save for retirement when you don't work for a company that has a retirement for you, like a 401k, employer matching 401k, any of that other stuff. And one of the options was an HSA, a health savings account. And a lot of people, and we only talked about it briefly, and a lot of people were like, I got a couple people who were like, "Hey, can you go into more detail about it? I've never heard about it. Can I get some more information?" And absolutely, yes, I can do that. So let's get into this. So a health savings account can offer, really strong, really powerful tax benefits that's going to, stretch out your healthcare dollars, right? Make them go a lot further. You contribute pre-tax dollars to this account and your investment grows tax-free. You can also withdraw money tax-free if you use it for qualified medical expenses. Some state taxes might still apply, but that's about it, right? So this, tax benefit makes HSAs like really good, right? Really helpful, but with two roles specifically, right? You can spend money on current healthcare expenses or invest to cover future ones, right? So you also keep your HSA money until you use it, even if you change employers. This portability differentiates from an HSA from a flexible spending arrangement, another account that covers healthcare expenses, right? You usually lose FSA money if you change employers or have any remaining funds after the plan year. There's some exceptions to that, but that's for a different video, right? So, do I qualify for an HSA? Well, you have to be enrolled in a health insurance plan that qualifies as a high deductible health plan. Your deductible is how much you pay before your insurance kick in, right? Meaning it starts covering part or all of each eligible healthcare expense. I think for last year, which was 2020, a high deductible is at least 1,400 for a self-only insurance plan, and 2,800 for a family plan. Something to keep in mind: the IRA or the IRS regularly adjusts those figures, right, for inflation. So your health insurance plan's out-of-pocket maximum also cannot exceed 6,900 single, 1,380 for family. You also cannot be a dependent on a tax return, enrolled in Medicare, or enrolled in another health insurance plan unless permitted under other health coverage, right? So, what's the maximum HSA contribution? It's a lot of numbers here, so we're going to get into this. So, last year in 2020, you, your employer, and anyone else can contribute to your HSA, but combined contributions must be at or below, I think it's 3,500, right? But that's for self only, and I think it's right over 7,000 for family, right? If you're over 55, you can contribute 1,000 more to either one of those plans, right? So what can you buy with the money in your HSA account? Well, you can spend HSA dollars on qualified medical expenses, which generally include dental, vision, and then like prescription costs, right? There's a full list of these things if you're curious about them before you start investing in an HSA. If you're gonna save for future medical expenses, or maybe you have to, maybe you have a kid and you're not sure what's gonna happen, or you just never know, right? But you can go to the IRS website and there's just a huge list, right? You'll pay a 20% penalty tax and regular income tax on HSA withdrawals used for non-qualified medical expenses. So really, contact your doctor's office if you're unclear whether that healthcare expense is qualified or not qualified, right? Because you're gonna lose a lot of money if you pay for something thinking it's covered and it's not covered, right? Make sure before you pay with your HSA it is covered, right? So where should you open your HSA, and does it impact how you contribute based on where you open it, right? So If your employer sponsors an HSA that qualifies as a Section 125 cafeteria plan, you may want to start your search there. If you elect to defer part of your pre-tax salary into the employer-sponsored HSA, these contributions, and if there's any employer match, they're not subject to Social Security and medical taxes, right? Medicare. You you won't reap this additional tax benefit by contributing after tax dollars to your HSA. Though you can still deduct the contributions from your taxable income when filing income taxes. So you might also receive some extra benefits from your employer sponsored HSA. So your employer might contribute money to your HSA. You can transfer any funds into another HSA, right? Some employers cover the HSA fees that you'd pay if you open the HSA on your own. So then, how should you invest in your HSA? Well, if you're using your HSA to invest, you must first determine your time horizon and an appropriate risk level, which will then inform your asset allocation, right? And then you can use, whatever website you want to use to research to find the best investments for your need. Again, I've said this previously, I really like Morningstar. That's just the one that I use. Use whatever you want to use. If you plan to spend and invest with your HSA, consider keeping at least your deductible amount or even your maximum out-of-pocket amount in cash. Then you can cover any healthcare expenses up to your deductible. You can invest any remaining money to grow into, anything, right? Like the sky is the limit, right? So, are there any other ways you could use your HSA? I mean, you can. So let's talk about a few of these, right? Because I use it one way, really two ways, but you can use it as a retirement account, right? So after age 65, you can withdraw HSA money for any purpose and avoid that 20% tax penalty, right? However, you're going to pay regular income tax on withdrawals for non-qualified medical expenses, right? Another way is to pay insurance premiums under COBRA, right? You generally can't use HSA money to cover an insurance premium or regular payments for an insurance policy. However, if you lose your job and you keep your insurance under what's called COBRA, or the Consolidated Omnibus Budget Reconciliation Act, continuation coverage, you can pay the premium with your HSA funds. Using tax advantage HSA dollars to pay your COBRA premiums can be a helpful benefit because COBRA enrollees are often responsible for paying the entire premium, right? And then the last thing is going to be to cover long-term care, right? So investors can use their HSA to fund long-term care expenses, right? You can either use the money to cover long-term care costs or to pay insurance premiums, right? Up to a specific amount, right? So HSAs can be use a lot of different ways. So the way that I'm personally using mine is going to be as as another retirement account, but it's still there in case something happens, right? My job exposes me to the elements, animals. Like I'm outside every day, 6 days a week. Long hours. I work a lot, so I can use it for in case something happens, but I'm also having it there as another retirement account, right? So hopefully this answers some of you guys' questions about HSAs. If you want to ask anything specific, you can just leave a comment down below and I'll get to it. Otherwise, go ahead and give this video a thumbs up. If you're not subscribed, go ahead and subscribe. And until I see you guys in the next video, y'all be safe.